So we have what we call a flag pattern, right? And the flag pattern is a trend continuation, it's a trend continuation pattern, right? Meaning that it's a trend, it's a pattern that we find inside a trend, right? In a trend that's already existing. And its duty is to show us that this pattern is, or this trend is either going up or going down and is continuing. Right. So what you see is um I think I've given many examples that leans towards the right direction and less towards the same direction. But anyways, for the flag, we find it both in an upward trend and in a downward trend. So just to balance things out, I'll start with the downward or bearish trend. Let me open my trading view so that we use my trading view, which can actually show us charts in a nice manner. Right, so now sharing my trading view over here. So a flag pattern, how it looks like is it looks like this. This is also another thing that I see most people doing wrong. If we're in an uptrend, our flag has to face down, right? So that it continues going up, right? And if we mark it, it has to look like this, right? And if we're in a bearish direction, our flag has to face up and it continues going down, right? And we mark it like this, right? So the only two ways we are going to trade this is one, if we're taking a risky trade, we want to trade a change of character, and we want to trade a break of structure, right? When we're trading a flag. Now, what does a flag consist of? It consists of what we call a flag pole. So in this event, let's say maybe we're uptrending, and obviously in this case we're uptrending because our flag is facing upright. So we're expecting price from before to be like this, right? So what we'd want to notice is the previous low and the previous high, in the newly made high, like this, right? And when we say the flag pole, it's this part over here, this whole part over here, right? So if you hold this part with your hands, it's gonna look like a flag pole, and this being the flag, right? So often, at many times, I hear people say, if it comes and hits one, two, three times, then it means it's now going. Or if it comes and hits one, two, three times, it means it's now going. Well, when we're working with structure, we don't treat our trades like we're trading them with the trend line. Of course, there's an element of a trade line because you have to see that pattern play, but you don't trade it according or based on how many times it has hit right. What we now do is SMC traders, we say, I want to show something here. So let me clear out what I've been doing so that we move on and we all understand what happens. So as SMC traders now, what you know is we are in a buy or in a bullish direction. Let's say this is our H4, right? And being in our H4, remember we are going to have a smaller time frame. Let's say for this instance, it's gonna be our M15, right? So let me use a different color and put red and put and do this and put a line. So our M15, what we are going to see from our M15 is it's going to be giving us a low. This is now a retracement, a high, a low, a high, right? So in our M15 now, what you know is when we break this structure in our M15, it means we are now in a sell direction, is it? Or we are now in a bearish direction in our M15. Right, this will be our breakout structure in our M15. But overall, our H4 is what? Our H4 is buying, right? So now what you know is, sorry about that. So now what you know is in our H4, in our M15, we are just selling so that we have this retracement, is it? But now, remember, we also have our premium and discounted levels that we have to take note of, right? And remember, we have areas like gaps, right, where our trade is to come and dip into before it goes out. I've actually discovered when you're trading flags, they usually tend to come into gaps more than order blocks. Right. I don't know for what reason why they do that. But now, um, let me use, right. So now what you find your flag doing is it's now playing right. You now have a flag. And as you dip in your discounted levels, you also need to take note of what you have in those levels. And for instance, let's say we have a order block, or maybe we have a gap that we have when you dip into it, the only way you can know that your flag has now ended in in that selling momentum and is now gonna buy is when it fails to break the previous high, the previous low, I mean, and then it comes and gives you a change of character or a breakout structure, and then it goes up only. And if you mark it, what are you going to see? You're going to see that you're going to have your flag, and it's gonna be looking like this, right? It's gonna be looking like this, and then it continues. So let's look for an area where we had a flag, um, either in the sell or either in the buy direction. Right, so let me choose any pair. Which pair can I go for? Because this happens almost in on any pair. Actually, this happens on any pair that exists. Okay, there's a question that we have here from Samuel Ryan. I've asked you to unmute. You can and have lowered your hand. We are
Good morning.
morning. How are you?
I'm good. How are you?
I'm good.
Um, you asked for any numbers in page.
For what?
So, could you please, you asked for any pair to use.
For any pair.
Hello? Yeah, you're
Hello?
saying, you're asking if, hello, can you hear me?
Yeah,
Hello?
I can hear you.
Yeah, I heard you were saying, you're looking for a pair to use. I just wanted to suggest a pair for you.
Okay.
Yeah, I'm a synthetics trader, so would you please maybe use, any bulls and crash?
All right, that's fine. Let me do that.
Yeah, yeah,
So, we have a request to use booms and crashes. So I'm gonna choose any pair from boom and or crash. Right. Since this happens in any pair or in any time frame, I'm gonna choose this crash 300 over here. And what we want to mark out are flags that helped us continue our trade in any direction that has been existing, right? So, for an example, what you see here is we have a flag on crash 300. But let me start with the pairs that are pushing to the upside. We have a we have a flag here. Let me delete this. We have a flag here. I think that we can all agree that we can see with a flag there. And sorry. And if we all agree, what we are going to see is with this low over here. Let me mark it. With this low over here, and then we have this high. Let me not use this two. I would want to use one from here. With this low over here, and with this high that we have over here. And if we want to mark our premium and discount levels, what we are going to see is our 50% was here, right? Which separated, somewhere here, which separated our premium and discount levels, right? So now, as our flag uh played out, you see that it dipped low in the discount levels. And what was it really? That it came and respected in those discounted levels. You can actually see that we have an order block in this area over here. We have an order block here, right? So what did price do? Price just came in that order block. You see it playing out, playing out, playing out, and then it shot straight up. Right. Just by learning or just by remembering what we learned yesterday, if we had put our stop loss just below this OB, no SL would have been hit and this would have been a sniper entry. And just by learning all the concepts that we've been learning, that whenever we get in a point of interest, what do we expect? We expect a shift or a shift in break of market structure or a change of character. What you're gonna see here is we had our change of character, we had our break of structure, and then it went up, it never came down. What you can also see is if you want to go to your smaller time frames, say the M15, Remember we're in our H1. Say we go into our M15. Where's our M15? Where's our M15? Say we go into our M15. I would want you to see something. What you'd see in your M15 is, in actual fact, your breakout structure, the change of character was way here before, and all it did was now just respecting order blocks from this area, and then it shot straight up. Right. So how will you put your take profit for a trade like this? How you will put your take profit from a trade like this is you just need to measure your distance from your high. Where is that two that we use? I can't see it, but let me just use this box here, and let me use this box. So then the same thing, you measure your distance from your low to your high, and that's the same distance that you're gonna touch from your newly made let me do this. No, I don't want to use that one. I want this one here. From your newly made low, right? And what you expect is when your trade buys, it's gonna be from your low to somewhere here, which is gonna be your newly made high. And what do you see? You see that when we got to that area, we had this sort of reaction, and then it continued. Right. I would also want you to look at something as we are going with that trend and trade. We also have another flag, and the only way you can really see it, let's kind of like move in our M15. Where you can see that we have another flag. And how did that flag play out in that M15? Here it is. So let's mark it with a low and our high, right? And with that flag, here it is. Let's come here down again and mark it. Right. Sometimes they're not as perfect as you want them to be. But what they are going to do is they're just going to show themselves up. So we have our small flag over here. And what you're going to see, if we mark our premium and discount, price came, right? Where is our 50% for that discount? It's here, right? So what you see is price came, and when it came, what is that one thing? One thing that it did. We have a gap here. If we mark it, you can see that we have a gap here. When price came, it just came and filled 50% of our gap, and then it went up. So it's just as simple as that. When you see that you have a flag, what is in your discount level that price is mostly likely going to come for? Yes, of course, sometimes it can dip and choose to fill these gaps. But if you see it reacting, even at the first gap here, what does it mean? It means your price is gonna buy. Right. According to market structure, you have your breakout structure. And once you see that this is the reason why there was your breakout structure, you also buy. It now depends on how you want to buy your trade. Do you want it to be straight away, or do you want to wait for confirmation of breakout structure and then you buy it? Right. So let's look for another pair, or since we were doing our example in a buy direction, let's now do it in a sell direction and see if either we had flags that we're leaning more towards our sell. So now we have this one over here that we have. It's small, but it's more visible in M5. Sometimes it doesn't have to be perfect in that time frame that you see it, but you can see that you have a flag here, is it? So let's mark it. We've marked our flag, right? So if you are someone who were told that it has to hit 4, 5 times, 3 times, then sometimes you would be losing in areas like this, right? So just by knowing this, your next thing that you obviously have to do is you have to mark your premium, your discount. And now that we know that our trade has to sell in a premium level, if we're in a sell direction, it's no longer the discount because you're in a sell, right? You mark your 50%, like what you did there, your equilibrium, and what do you see? Your price came reacted on this order block over here, and then what did it do? That was your flag, came in the premium, reacted on that order block, and sold, right? Sometimes it can even come to choose, it can even choose to come, sorry, and fill this gap and then sell, right? But if you look closely in your smaller time frames, what you're just gonna be having here is you're gonna be having your breakout structure at your point of interest. That's what matters the most. Do you have a breakout structure or you don't? If you don't have a breakout structure at this order block, don't sell it. But if you have a breakout structure on that order block in a lesser or a smaller time frame, then sell it, right? And what you can see is you had your change of character first here. If you go into your M5, M1, and then you had a breakout structure here. Remember, we said the analysis that you do in M15, your entries, usually they are in M1. Right. So this was a change of character, a break of structure, which told you that, you know what, you're now selling. And then it sold. Right. This is not flag related, but I want you to look at something. What you were left with here was a gap again at this area over here. Right. Why? Because when we break certain areas of price, or when we move from them, you'd find that these gaps are created from sellers overpowering buyers and not leaving a balance in the market. So, like we've always been saying, price will always need to come back to those areas and then sell. Now, I want you to look at something. It came, if you really look, this is what we've been talking about. It came with its highs and lows, high, low, change of character, break of structure, and then it went down. So this is why I'm always telling you, whenever you approach a point of interest, you have to see that change of character. If that change of character and break of structure don't play out, don't sell it or don't buy it. This is what I'm always screaming, right? So in this event, let's say you had seen that your trade had respected this gap, right? Where was your stop loss gonna be? You could choose to put it just below, just above this high. Why? Because you'd consider that if that high is broken, you've changed direction. Or you could choose to put it just above that gap, right? Why? Because you'd consider that the gap should be filled at least 50 or 100% and then it falls. Once it fills and then it starts closing above that gap, it means it's changing direction and it might buy. It's as simple as that. So if we were in a trade like this flag trade here, like this flag pattern trade, where would I put my stop loss? It's two ways, right? It's either I would put it just above this high or just above this order block. Yeah. Why? Because if it comes and breaks that high, we are now considering the change direction. Or if it comes and violates that order block, it most probably means maybe it's gonna come and respect this gap, right? So the most logical thing to do for me would be, since I have a gap here, since I have an order block here, my stop loss would just be above that high. Why? Because it might just come and fill the gap. It might just come and go for the gap, right? So sometimes you need to lean more towards into thinking strategically as well, is it? So I want you to know something now. You could enter this flag over here in two ways. You could say if you have a change of character in M1 or in your lesser time frames, let's say maybe this was your H4, right? If you had a change of character, you could straight away trade it, or you could wait for a break of structure. Remember what you talked about yesterday when we were talking about break of structure. We want to see a full body break, and this is where our structure broke. So the moment this candle closed, I want you to look at this candle, this one here, here, this one here, this one. The moment it closed, I'll start taking sales at this area, right? And I'll wait for my trade to play, right? Where is my stop loss? Above here or above here? Even if it comes, I would wait, and then this was gonna be a straight away trade. Just by knowing that I'm using a flag that has helped me to go and mitigate an order block, or a flag that has helped me to go and run away from my fair value gap once it filled it. Right. So again, let's look for other examples of where we can actually see flags in the market and how we can use them for entries. Right, with this flag over here, but this leans more towards a very bigger time frame, say the M30. I want you to see something. Right, what you see is we have a flag, and if we mark it, it's gonna look like this. Right, this is our flag here, and this is our high that we're gonna use for this flag. If we do this and we touch that low, what are you going to see? You're going to see that we are going to have a high, a low, and where is our 50%? Or 50% is here, so that we separate the premium and the discounted levels. And where did our flag come and play into? What it did was, if you want to look at it, if we take our fib and we touch this high, sorry, if we touch this high and touch this low, we want to separate our order blocks, right? So with this valid order block over here, I think we can all agree. And we have another one over here. I think we can all agree. Now let's remove our fib so that it doesn't distract us, right? So now we have two order blocks. This is the 50%. Let it not confuse you, right? So now we have two order blocks, one that's here and one that's above. So what did price do when it was playing out in that flag? It just came in this OB and then it shot right straight down. But how did it shoot down, and where was I most probably gonna take my entries? So let's kind of move in a bit deeper with it. So we had this low, this high, this low, this high, this low that failed to break that high, right? So we are gonna be hunting for this low since it failed. Now, the break of that first low is our change of character, and this would be our break of structure over here, right? So how would I enter a trade like this? Firstly, I'd look at two things. My time frame is a bit high, so I'll go into my M15. We are not trying to find things that make sense, right? I'd go into my M15. In my M15, my first change of character was at this point. So I'd move it a bit above here, right? Which means if I had my change of character at this area over here, I'm looking for my marker. If I have my change of character over here, obviously the next thing I'm gonna wait for is my break of structure, right? And what you can see again is before it broke that structure, I would have, let's say, I would have wanted to enter this trade. I would have sold it from here. Let me mark it like this. I would have sold it just here when it finished giving me that change of character, just around this area. And where would my stop loss be? My stop loss would be around this high over here, right? Why? Because this is going to be my structural high, and this is where my OB is. So if I extend it, okay, what you see is we are not supposed to come and break this area of my order block over here, which is where my high lies as well. So just at this green candle here, I would have sold. And even no matter how much it played, what you see is you never came back to your stop loss point. And then when you finally get that break of structure, if you are someone who wants to wait for a trade to give you a break of structure, right? According to these areas over here, you would have your entry somewhere around this area, right? And I want you to notice something. Whenever we break structure, what do we always leave? We always leave gaps, like I mentioned. And if you want to look at it, especially at this point, we left a gap at our breakout structure point. This is not a trend. Don't treat it as a trend line. And then when price came back to that move that gave us a breakout structure where there is a gap, it just came straight up through that gap, and then now it's falling. This is what most people would consider a retest. In people who use a trend line, they would consider this a retest. But what if that retest was gonna target this gap over here? How do you know if it was gonna target that gap over here? You use the trend line, right? So that means if it hits that trend line, you're gonna sell. But what if it pushes a bit deeper to fill this gap over here? This means kana uri munhu anopombera. If you're someone who's a risky trader, it's either you can even blow from this small move, or you would have gone in distress and straight up fear from just this small move. So you need to let your trade come in an area that you know that it's gonna react into. Once it reacts into that area, then it continues with you, right? So I want you to look at this. If we were to trade from that, you touch that high and that low, right? And where is our gap existing? Just a bit deeper into the what? Into the premium point. Right, into the premium zone. Why? Because when you're selling, we sell from the premium. When you're buying, we buy from the discount. I'm now hoping it makes sense to you. And then when it came into that premium, it sold. Even when we try to look at the gap itself, what you're gonna see is, let me delete this. Even if you try to look at the gap itself, what you're going to see is when we sold based from the change of character, we never hit our SL. When we sold based from the breakout structure, we never came into hit our SL. Instead, now when our trade starts playing out, if my stop loss was here, my stop loss was above here, When I move from that change of character phase to that break of structure, I move to here, right? And now that I have a new low, I'm gonna move my stop loss here, meaning that all the entries that I've entered first are now above my stop loss. And the more that I'm gonna trend going down, is the more that I'm going to move my stop loss. What does it mean again? It means, let me do this. It means if now I'm gonna have a new low here, a new high, a new low, right? The moment I see that my previous low has been broken and now I'm having a new high, straight up, I'm gonna move my stop loss again and put it here. And as it goes down, giving new lows, new highs, I'm gonna be shifting my SL, right? Sometimes what makes your trade worth the while, it's not the take profit. Sometimes it's the stop loss that you are shifting. Because maybe at some point you have your entry here and then now your stop loss is here, right? You don't know where to take profit, right? But just by using your stop losses and shifting your stop losses, that final move that is gonna come and change your direction, give you that change of character. You're gonna hit your stop loss, meaning that you have taken profit for this whole range that you have moved into and you've made it. Right. So we have less than a minute remaining to our session.